go higher, dollar tends to do better. So, you know,
I agree. I think we could pull the yields could rally back towards the 290 level.
Yeah, okay, so that'd be a huge move. I mean, you're talking about the 10-year dropping all the way back down to 120 or maybe even a little bit lower,
halfway back or so.
Yeah, I mean, you know, you're talking way back here.
Yeah.
If that happens, what does the dollar do? Does the dollar rally? I would think so. And then you go to gold. Okay, you got here's silver, there's gold, and you were just discussing it. You know, we just got past the 618 here. We rallied into, you know, this resistance zone, and you know, obviously my zone of resistance might be off a little bit, but you're still rallying right into this resistance zone. And I mean, look at you know, daily RSI is extremely overbought. We're up towards levels that typically will reverse the market. Now we've seen, you know, extensions before, but typically, you know, we're up at levels that the gold market may stall. And again, if gold reverses, what does the dollar do? You know what I mean? If
you know, that's a great point, because gold was able to take advantage of the decline in yields while the euro was not.
No,
so
and
that's
yeah,
a great point.
And you know, one of the you can argue and say, well, yields tend to have more of an effect on the dollar yen and maybe less on the euro. Then you have to explain to me why the euro hasn't followed gold, because the euro and gold tend to have a pretty strong relationship. Now, let me reiterate: yields can continue to go lower, bonds can go higher. Gold can go higher from here. All right. Long term, I'm a bull, gold bull. I mean, and you guys, everybody knows that has been listening to this webinar for a long time. I had not said I was a gold bull since about right here, right there, before we peaked. But that is about when I became a gold bear, and I haven't been a gold bull really for, you know, I mean, I've been, you know, bullish from time to time down at these levels, but you know, right now I'm a gold bull right now, and so I think eventually gold continues to go higher, and I think the euro is going to, you know, eventually make its way to 118. Sorry, 118, 120. Sorry, it's just Fridays always kick my butt. But you know, the question is today. You know, I'm more worried about today. So if you go to the euro, I was just talking with the guys in the office in Greenwich, and they all confirm the same thing that I was thinking. They're like, look, it's going to be easier to trade a weak US dollar or a weak number, excuse me. You know, so if you have, you know, you have the FOMC that you're expecting 179,000 jobs. You guys saw the ADP number came in rock solid, right? Here's the Bloomberg numbers here. Let me expand this out just a little bit. Okay. So you got all these numbers that are coming out. Like, look at all the numbers. I mean, Forex Factory only shows you here. Forex Factory only shows you this right here. There's so many more components in those jobs reports that you know, the Bloomberg will show you. You know, like participation rate, you know, Canadian participation rate. You got the unemployment rate, which you know we're looking for average hourly earnings. You know, weekly hours, all employees, labor force participation rate, underemployment rate. I mean, you got a lot of numbers that they're going to be fed through here, and all the algorithms are going to be reading off of these numbers and making decisions rather quickly. So you got to be, you know, kind of, you know, everybody's going to focus on the private the payrolls number, the headline number right there, 185. And remember, the whisper number is probably, well, it's probably somewhere close to this number now, because that had risen from 178 to 185. But the rise in ADP was great, but the manufacturing PMIs it was the biggest PMI drop, and we don't see drops like that except when we're in recession. So that was a scary number with the PMI yesterday. So you look at the PMI that we got yesterday, the ISM at 54.1. That type of drop, you don't see that in except when you're in a recessionary type of period. So that is a scary number, and I think that's why it tempered what the change in jobs report would be according to Bloomberg. But anyway, what I'm going to point out here is I think it's easier to trade a weak number because you got the dollar yen that's struggling at this 108 level. And by the way, I shorted the dollar yen at 108.10 yesterday. I got filled at 108.10. And then I covered it right here. Remember, we were talking about it yesterday. I had this little rectangle drawn yesterday. I'm like, I'm going to try to sell up here. We went as high as 108.30. I got hit on an order, and then I closed it back below 108. And I know some of traders in the ForexAnalytix community ended up making a little bit more than I did. They ended up getting out around the 107.50 level, which is great. But what I do want to point out is while we're below this 108.50, I think the risk is lower for the dollar yen. So with that being said, trading a weaker number is going to be easier. If we have a weak number, and let's say we only create 150,000 jobs, or maybe 140,000 jobs, the easier trade is going to be to short the dollar yen. You have the euro dollar that's right up against a 618 retracement. We're stalling ahead of this 114.25, and I think that on a weaker number, the euro dollar could break above the 114.25 level, and we can target 115. Now the question is, are we going to be able to break 115 today? And I think that has more to do with Fed Chairman Powell. And if he comes across as being extremely dovish, because remember, the market's already pricing in a rate cut in 2020. Crazy. I mean, that is kind of crazy, right? So
it is. It's going to come a lot earlier.
Okay. The ultimate bear, Steve is here. But Steven, I'm going to pass it over to you in just a few minutes. But here's the thing, if he is very dovish, and if he starts to really recognize the slowdown in U.S. economic data that we've seen, and he doesn't sound as hawkish as he normally does, could that be the catalyst that drives us above 115? So I'm going to just make it real simple for you guys today. 114.25, big deal. 115, much bigger deal. And I think we can, on a weak number, I think we can get above 114.25, and target 115. But the only way we're going to break above 115 is if Powell really is super dovish at this, or is viewed as super dovish. Then we might actually break the 115. And I have to say that if we get above 115, things are going to get kind of squirrely for the dollar. Now, the flip side is, how about if we have a strong jobs report? I mean, how about if we create 200,000 jobs and unemployment stays at 3.7%? I mean, can the euro drop down to 113.50? I think it can, but I think it's going to have a real tough time making much downside progress, because stocks will probably cheer the fact that we have a strong jobs market. And if we do, then the next thing you're going to have the euro yen continue to squeeze higher, which the euro yen stopped out a lot of traders on the
grade.
Yeah, I mean, this thing could squeeze right back to 125. I mean, it shook everybody out. So you know, I would be very reluctant to be too short the euro dollar at this point, not with today's numbers. Now, the one thing that I have to point out also is the Canadian. The dollar Canadian is extremely weak. We are breaking, you know, the breakout point. It has been leading this dollar lower. We have stronger crude. We have a stronger Canadian. We have a stronger Norwegian krona right now. The dollar Canadian's going to come under a lot of pressure if we break 133.50. If these Canadian numbers come out strong, and by the way, here let's look at, you know, look at Canada. Let's see, you know, we're looking to create 10,000 jobs here in Canada. If Canada posts some bonkers number like it did last month, which it's not going to, that was an anomaly. But I mean, well, maybe it does. You know, I mean, maybe I'm wrong. You know, maybe we do some crazy number, because, like I said, Canada's numbers last month were, you know, crazy strong, right? So that was an anomaly. We should moderate quite a bit. But let's say we post another big number. The dollar Canadian has been trading extremely weak. I mean, basically the wheels have come off the bus since 2 days ago, and we've gone from 136 to 134. You know, it's a 200 pip drop, 200 plus pip drop. And, you know, any type of weak US data and strong Canadian data, I mean, we could be trading down here at the support pretty quickly. Remember, the market has kind of gotten away from itself on the downside here with the dollar Canadian, but maybe somebody knows something. You know, I don't know. But it's coming in, you know, it's coming in pretty weak. There's a lot of people buying Canadian dollars as of late. And I think a lot of that maybe is a shift between, you know, you've got the Bank of Canada who has yet to normalize rates, but you've got people already talking about the Fed possibly cutting rates in the future. So that could completely turn the dollar Canadian around, like longer term, like put us back down at 130, you know, if the Bank of Canada starts to get more hawkish moving forward. So those are the things I'm looking at today as far as the market goes. Like I said, I think it's going to be easier to trade a weak dollar. I think, you know, knowing that the dollar yen, one last thing I want to mention, knowing that the dollar yen is probably at the upper end of this little range here. So, you know, selling around the 108 level and targeting a move back down to 107 or 106.50, that makes sense to me. It's going to be more difficult for me to trade a really strong piece of data, because I don't know if I want to get stuck buying the dollar yen either, because of the way that stocks have been acting as of late. You know, while the S&P trades below 25, you know, I'm having a hard time, you know, selling yen while the stock market's below this resistance. And the top trade for most banks in 2019 in the FX is short dollar yen, just so you know. And we just started 2019, so that's like the top trade of most banks right now. So, and that was we were just discussing that in the office just a moment ago. So with that being said, I'm going to pass it over to my colleagues Steve and Stelios. Good morning, Steve. You sound a lot better today.
Yes, I'm getting better by the day. Thank you.
Damn it.
Hey, Blake, before you go, you know, you're showing Forex Factory up there, and you know, it's a great site.
Yeah.
And I was thinking, you know, how I am about words, and I'm certainly grateful that I don't work at a Forex Factory, but I work at a Forex boutique.
Very nice. Very nice. And by the way, actually the better calendar here is on investing.com that we have you know, integrated in a ForexAnalytix. So just I think this is actually the better calendar to look at. It's easier to look at. I don't know why. I think it's more habit that I have that up for so many years. But anyway, all right, guys. Well, good luck today. I hope everybody, you know, knocks it out of the park and has a great Friday. And thanks everybody for tuning in this week. And I'll see you. I'll see you bright and early Monday morning.
Thank you, Blake.
Thank you.
Thanks, guys. Good luck.
Bye-bye, mate. So, coach,
Yes,
how have
buddy.
you been?
Good. You sound stronger.
Yeah.
Good news.
The voice is not back yet, 100%. So,
Yeah.
you know, you'll have to tolerate the heavy voice, but I think I'll be doing okay.
Congratulations on crude too, Steve. That was a great bottom pick.
Thank you. I actually closed the second third of my position today at $48, so I now have only one
Yeah,
third left on the table.
doesn't
But
it feel good? It doesn't feel good after you go through the whole process. You're scaling in, so you're underwater for a while, and then you take off a piece, and that takes some of the heat off, and then you're off your second piece. I know you do thirds a lot, and then
yeah,
having a third on in profits is kind of like a birthday party,
yeah,
right?
it's nice actually. And if you remember, I attempted to bottom pick it like 3 times. Once I made it out at break even. The other time I made it with a small loss. But you know, as I was explaining on the webinar, I was more than confident that there is a decent amount of money to be made to the upside. And you know, the second piece I took off was like almost 7%. So you know, as I was explaining, even playing against the trend, once you know how to manage your risk and you're risking little to make much, you can be wrong a couple of times and still have a a very nice trade. And I'm going to keep the other third because I do believe there is a decent chance, especially if NFPs help. I do believe that there is a decent chance that crude can actually end up rebounding significantly more than here. Significantly
I
more.
sent you guys a report yesterday that I got from Jim, and they're like real elite analysis. I don't know if you read it, the credit analysts.
I got it. I didn't manage to read it because
They're looking
my
for. They're saying kind of what you are, and their price target for 2019 in crude is pretty out of the consensus. They're talking like 85.
listen,
And they're not a hype house, you know what I mean? They're not
if if we get the big reversal in dollar that I'm expecting within the next maximum couple of years, because I expect a big drop in the US dollar within maximum the next couple of years. Yeah, it can happen. It can happen. Because if you remember, my thesis is that it's very hard that during the next recession, something is going to have to give, and the easiest target will be the dollar. I mean, as a policy tool on the side of the Fed and US politicians, because I don't think they will have different choices, but the easiest one to make would be to probably sacrifice the dollar, and I think it's a high probability scenario. I know that the market is indoctrinated, the market is conditioned to believe that a financial crisis or a recession is going to produce a bid for the safe havens, and dollar is considered among them. But I do believe that that might be a very wrong approach. So I do think that the dollar is in grave danger in the medium to long term, and in that case, commodities can benefit substantially. Now, before we get the NFP numbers, I wanted to show ForexAnalytix members have already seen that. I wanted to show that both silver, we had this rectangle formation. This is a 4-hour chart. We had this rectangle formation in silver. Silver hit today a horizontal resistance area and the target of the rectangle, which is roughly at 1580, and has reversed from there. And at the same time, gold first had an overthrow from this ascending wedge, almost tested 1300, and now it's back testing this wedge support. So I think that both of them are in danger of deeper pullbacks, at the very least deeper pullbacks from here. Anyhow, we're just a few seconds away from NFPs. If we did not have this strong ADP number, You remember the previous NFP number? I was looking for a weaker NFP than the consensus, and that was the case. I would be looking for a weaker NFP once again, but the ADP number might lead to a
Oh, 312. Oh my God.
Yeah, 312.
Average
Yeah,
hourly
so,
earnings also stronger.
yeah, so the ADP number, as I was saying, the ADP number would, we would go against it, and as it seems, the ADP number was a good indicator that we would have strong NFPs. That was actually a huge number. Of course, you never know how it's going to be revised, but for the time being, we have to take it as it is. The weird thing is that we're getting unemployment jumping to 3.9 from 3.7. I haven't seen the number yet, but I'm guessing that can
participation
only be,
rate went up.
Exactly.
Yeah.
Exactly. That can only be to increase in participation rate. How much did it increase?
0.2%. 0.2% up.
Yeah. So the increase in unemployment rate does not constitute like a bad development because it's purely due to increase in participation rate. Participation rate is now, Stelio, at what?
63.1. Let me check it. 63.1.
Yeah, and if I remember, we had bottomed at 62.7.
Yeah, it was like a 40-year low. It's still at very, very low levels.
Yes, it's still we're very close to the historical lows. That's very true, but still quite a significant jump in participation rate, which produced this jump in unemployment rate. So far, the reaction has been decently subdued. We're not seeing like big changes. Let's go down to the 4-hour chart. So to begin with, gold is already breaking below this wedge that we were talking about. So if you remember, I was just saying that silver and gold might be threatened here for a deeper pullback. So let's see if this is going to be the catalyst for a move lower. By the way, hey Grega, welcome to the party. By the way, let me add to this to say that this is a very strong employment number, but nothing has changed my point of view. I still believe that 2019 is going to be a very tough year for the economy, and it's going to be very tough avoiding having a recession within the next like 12 to 18 months. So, a good employment number doesn't really change my point of view. But on the other hand, as I've said multiple times, this is a macro thesis. I don't trade based on my macro thesis because macro theses never give you an entry point. They never give you an exit point or whatever else. The only thing they give you is higher conviction in which side of the market you would be willing to push more, to use more leverage, right? So keep that in mind always. So let me see if we have any questions. Will be revised. Just wait next time, in my opinion. Yeah, there is a very good chance it's going to be revised. We've seen revisions being. Stelio, by the way, speaking of which, did we get a revision to the previous number? I didn't have a look at that.
Let me check right now because, the revised number is 176. And hold on a second. I think it was revised higher slightly. I'm just checking it right now.
I think it was 161 from
yes, from 155, and it's revised to 176. So slight revision, yeah, 20,000.
So a good revision as well. So overall, a very good number. But despite the good number, the dollar is actually not picking up, and that's quite a bad sign for dollar bulls. Let's go to the DXY.
Maybe they're just waiting for Powell, right? Who's speaking a little bit later on.
Most probably, but definitely the fact that we're not seeing. I mean, dollar immediately reacted higher, and now it's giving back the gains. So definitely not what you would have expected after a huge number than the one we had. Okay, so I think we need to give more time to the market, and definitely Powell is going to be a game changer. I think that the market is now going to be waiting to see what Powell is going to say. Personally, I expect that Powell is going to underline the data dependency. So I don't think he's going to be overly too hawkish. I believe that more or less we're not going to hear something, unexpected. But I have to say that the dollar has clearly lost any momentum, and I wouldn't be surprised if the next dollar move is lower. Now, I would be very interested to see. I know that his approach is not going to be from a fundamental perspective. It's going to be from an Elliott wave perspective, as you all know. It's good to see what Gregor is expecting, especially after the nice volatility that we have had, during the holiday season. And what do you think, Gregor? We've had the first few days of the year. What are you watching for now? What do you feel more comfortable with trading at the moment? I passed you the screen, by the way.
Yeah, sure. Just a second.
Welcome, Wizard.
Hey, Dale. How are you?
Buddy? Good, buddy. Happy New Year.
Same to you.
Thank you.
I still think that if we begin with dollar index, despite some volatility that we have seen, I mean, a very strong one recently, there is still a chance that actually dollar index, will still see more upside, because we have seen a very strong volatility on yen pairs, even on Aussie dollar, but the dollar index just stayed sideways. So in my opinion, this market is still consolidating and waiting for a break out of the range, and it appears that we have to stay in this trend to look for another maybe final push to the upside on dollar index. But what is really interesting is that euro dollar did not even blink when Aussie dollar declined. So now it's a perfect time to look for different opportunities in different markets. For example, if you want to be long dollar, I will still be looking for potential shorts on euro dollar. But if I want to be short dollar, I want to be against commodity currencies, because New Zealand dollar, Australian dollar made a very nice spike to the downside and reversed higher. So I think that despite these missed correlations that we see at the moment, I think that they are perfect for us to either to look for some pairs where we see strong dollar and maybe look for trades there, or maybe weak dollar and look for trades, as I said, on commodity currencies. So
I just have a question because of what happened this week with the raid, with the yen and some of the other pairs. As an Elliottian, how do you handle those kind of wicks and aberrational spikes? Do you include them in your work? I know Steve ignores them in his work. How do you handle those in your analysis?
From a trading perspective, I think that Steve is right. We really should ignore them, because actually that's not a real trend. As an Elliott wave guy, I want to trade within the trend. So this was just a temporary move. So,
like an aberration, you just negate, it's aberrational, so you just forget about it.
Yes, but I still have to label the waves, and I still come out with a solution what this spike was. So I still think that I was bullish on Japanese yen on a lot of crosses, and I just think that we may put a temporary low in there, and the Japanese yen could actually weaken, especially if stocks market will again try to recover, which I think it may, at least at the start of 2019. So I think the Japanese yen, if you were not looking for bullish trades for longs on Japanese yen now, then definitely you are too late now, I guess. Right.
Okay. So, thank you, buddy.
I think that this market may just go sideways. This volatility, I doubt that it will come back very soon. So maybe we'll just stay consolidating. And as I said, I see some very interesting opportunities on commodity currencies. So firstly, dollar index, as I said, we are still in a corrective phase here. I'm looking for a final push to the upside. And also euro dollar, same thing. If we take a look here, I'm still looking for more weakness within wave B towards this 138.2% extension of wave A. So there is room for more pips to the downside, and especially I stay bearish because this recovery from November lows was clearly corrective, and Steve knows this very well as well. So I'm sure that he agrees, at least short term, that we should see more weakness. So
yeah, it looks like it. It looks like
yes,
it.
I mean,
It looks like it, but to be honest, I think there are so much better opportunities out there. I just don't want to touch this pair until it finally gets some life back. You know what I mean?
yeah, sure, of course, definitely. But as elite wave guy, I have to recognize. I have to try to recognize end of the pattern. And what I like about the euro dollar is that we have seen only a temporary move to a new high, reversed very quickly. We also took out this previous swing low, and on a 1 hour chart you can see that we reversed actually in 5 waves, and this move to the downside is much more stronger compared to current rise. So I would not be surprised if next week we maybe see euro dollar trading much lower. But as I said, there are different dollar pairs that shows different picture. So for me, if I want to be long dollar, I would be looking for euro dollar shorts. If I want to be short dollar, I would be looking for New Zealand. Okay, so here's New Zealand dollar. What I'm looking at, firstly on a weekly, is big consolidation, okay? But what I like is that we turned up from, this was what? From October lows in 5 waves, okay? And we reversed back to 61.8%, where we can see some nice spike down there. So I think that there's a chance for more upside here, especially because this decline, okay, was already corrective. But I'm waiting a little bit more. I'm more patient here. I want to see a push back into this wave area, because if
I want to see a daily close above 67.20 personally.
67.20. Okay, yeah. That's actually right there. Yes, and that's a very good point. Why? Because if some would say that this is still a bearish ongoing impulse, and we label this as a wave 1, wave 2, and wave 3, wave 4, and expecting more downside, let me just remove this.
Then it can't go in that territory. Yeah.
Exactly. And so far we are already very close. And also, if we take a look on the hourly chart, we already have nice structure that can be counted in 5 waves, right? So I think that this New Zealand dollar is definitely very interesting, at least, even if not back for 0.7, I think that at least back for 6,850 maybe, and could be more than enough to make money on the upside, since we know where the short-term invalidation level is actually at this low, because we have seen 5 waves up from there. So New Zealand dollar definitely looks bullish, and I like New Zealand dollar more than Aussie dollar, because Aussie dollar Aussie in general was very, very weak. But if this weak currency is now trying to put a low in, then definitely I want to be looking for trades in this direction. I want to buy the strongest currency, which is New Zealand. So Aussie dollar, why I think that low can be in, because here on the 4-hour chart we can count 5 waves down. Waves 1, 2, 3, 4, 5. And so far we have reversed back into the territory of a wave 4. Firstly, I thought that this was an extended wave 3, but because we have seen immediate reaction back to the upside, back into this range, this any bearish, aggressive, impulsive wave count would be invalidated. So it appears that low is in place, and at least 3 waves are going to take this pair higher. Okay, so I'm definitely looking for more upside, and because, as I said, Aussie was very weak, New Zealand dollar was much better when Aussie dollar was declining. So I think that now can be a time to look for long opportunities on commodity currencies, especially because this weak commodity currency shows evidences of a bottom.
Since you are talking about commodity currencies, I was showing just before that both gold and silver are actually at some key levels.
Yes.
Yeah. What do you see from here?
I mean, to be honest, gold and silver really surprised me. I know that
Me too. Me too. I expected.
We were very happy probably because he was looking for this bounce for a while, I guess. So, but I'm still bearish. I'm especially on a weekly time frame on gold because here.
I hate you, Greg. I really hate you. I'm kidding.
Why? Because I'm still bearish.
I'm kidding. Don't worry.
Yeah, I mean,
He hates you because you're still bearish.
Another $50 here.
Yeah.
Yes. What you said, Steve?
I said that he hates you because he knows that you're still bearish and you're a lot more often right than wrong. That's why he hates you.
But with this nice move to the upside, I'm sure that he will manage the investment correctly. Okay, so here on a weekly chart, we are approaching the 61.8% fib level of wave C. So this is a projection where typically in triangles, you will see a new reversal. And so we are going close to this level. But what is important is that this structure within wave E appears incomplete. Okay, so this is a 5-wave movement to the upside.
Yeah, clearly.
1, 2, 3, 4, 5. I know that there are overlaps, but corrections are never in 5, especially deep corrections. They are either in 3s or in 7 swings. So I think that we may see a pullback and then another leg to the upside. So what I'm looking at,
there can even be, isn't this potentially also an extended third? So there might be like,
yes.
So like a 1, 2, 3. Yeah, exactly. Yes. Because that's how it looks to me.
Yes, it can be. But notice that gold likes to make an extended legs, which may not stay there for a long time. What I'm trying to say that this decline was also an extended, right?
Yes.
You would say that this is probably wave 3, wave 4, we are going lower. But it was an extended decline within a triangle. If we take a look here back in 2016, there was another extended decline for a wave C, right? It was if you would be tracking price action around December lows in 2016, you would probably say that we are going lower after wave 4. But again, it proved to be only wave C. And even in previous rise, we had an extended leg. It was not wave C, but it was wave A, which was extended, right? So it looks like that gold loves to make an extended wave. So I'm still curious to see if this will once again prove to be the case, and I would not be surprised if wave E is making just very deep, strong, extended leg, which still can be part of a triangle. We really have to keep in mind where is invalidation level. It's definitely
a lot higher.
2016 highs. Yeah. Yes, so we have room definitely for much more upside here.
Okay, yeah. So Greg, I interview other Elliotticians as well, and I do a lot of intelligence gathering, and there were a lot of people that were saying calling for 1286, and for 1570 silver, but the character, and you just pointed it out, that we're doing 1-2s has changed their bigger picture, so that they're a pullback, but they're thinking that this could be a more important. Yeah. What it did. So is this? So you're coming up with an alternate that it really doesn't change the macro, but that we could just have this extension towards 1310 and then fail and take out 1160. Is that what I'm hearing?
Yes, exactly.
Okay.
But what interesting, maybe for short-term traders, even if I'm on the long-term bearish and expecting or waiting on this completion of wave E, there can still be room to make money on the upside, because as I said, this recovery is not in 7 swings. Okay, it's in a 5 swings. So after a pullback, I'm expecting more upside. And even on silver, we take a look at silver. Here again, I'm tracking a very sharp recovery, and even here can be room for more gains, because I'm tracking an extended wave C, which means after a wave 4 pullback, expecting more gains. Okay, so I don't think that we're already turning to the downside, but I just think that gold and silver may see more upside to to attract more buyers before we make a reversal.
Combining your most likely scenarios having to do with euro, which is heavily weighted in the DXY, and what you see here in potentially in metals, isn't there a decent chance that the interpretation for a possible one more leg higher in the DXY towards 99 might not play out? I mean, if we do get like one more leg lower in the Euro USD and we do have at least one more leg higher in the metals, then perhaps we need to see a deeper pullback in the DXY as well, at least initially, before seeing higher prices.
You mean like 94, 94 and a half, Steve?
Perhaps, yeah. Even down to 93,
yes,
yeah.
Sure, but it's very interesting. This definitely plays an important role, but I'm not sure if I should rely on this correlation so much at this stage because the correlation is not there. I mean, if I would ask you 1 or 2 months back, if gold will be trading where it is today, you would probably say the dollar index would already be.
You're right about that. Exactly. You're right about that.
Yeah,
you're right about that.
So correlation is not there, and maybe will gold slow down and dollar index will finally break to the upside. So
it is impressive, by the way, though, that given the very, very strong numbers that we had, because this employment report was strong everywhere, and I just want to comment fast. We have a friend here that listens in that says 312K was good, 3.9% really bad. 3.9% unemployment, that's a nominal number. It has absolutely zero value. It's anyhow, as Trump would love to say, it's anyhow a fake number. Unemployment is anyhow not 3.9%, and I'm not saying that, you know, from a standpoint like that statistics are rotten or whatever else. I'm saying it from the following standpoint, is that you can't even compare it to previous. I mean, when I say previous, I mean from previous business cycles unemployment numbers, because participation rate, for example, has been falling steadily, and that plays a role. And today's jump in unemployment was 100% due to a jump in participation rate, and that's something positive. Having more percentage of the population participate in the workforce is a positive thing. So, you know, the jump in the nominal number is not a negative if it comes due to a positive event, which is more people participating in the workforce, right? So don't focus at all in the jump from 3.7% to 3.9%, because, you know, that didn't come, you know, due to something bad happening. It was, you know, purely due to something good happening. Now, Gregor, we have a friend here asking, and I know that this is the $1 million question. I am expecting another leg higher, at least towards 2,600. The same thing, Josh said the same thing in his interview yesterday in Real Vision. What do you see happening with US stocks at the moment? Do you think that this was the first leg higher of a corrective bounce? What do you think is going to happen with risk here?
I think that we will see a recovery on the risk, but I would love to see, it's definitely not the same thing, what I would love to see and what is going on. But from an Elliott wave perspective, I need to see another leg to the downside.
No, I agree with you. I mean, I want to sell 2,600. I want to sell, actually, my exact point of view is that I want to be scaling in short between 25.50 and 26.30. That's my plan. I already have a plan for that.
My problem with the wave count, with this number, if we see 2640, would be that in such case we would already be deeply here in above this wave A swing low. The wave A swing.
What is your line in the sand?
Actually, that I think that we may stay sideways here, consolidating, and then we see another dip to the downside because there were a lot of buyers, probably a lot of stops below this spike. So if we can clear this out, then I would be expecting a reversal.
So you think the market won't give me?
Ideally in February.
So you think the market won't give
Also,
me?
look at the RSI at the end of wave 3 that Greg has up. It was really confirmed. I mean, there was no divergence before the
No, I agree with you.
pop at all.
So
that implies another low.
That's a very, very good point there. I mean, you mean this divergence. There's no divergence, right?
Well, they confirmed on wave 3, I use a 14, but it was a new low, which is a confirmed low. So price and RSI confirmed the low.
Yes.
Yeah, it did. So
it
you think
may not next time after the bounce and goes to your wave 5 or C target, then you may have a divergence. Is what I'm.
Yeah, we may get one then. So
and what we also have probably it's good to keep in mind is that German DAX did not see any significant bump yet. I mean, it's still acting very weak. I know that low can be pending here. We may not be far, but still, even with today's high, it's still only a 3 legs to the upside. Unless we see an extension higher, like in wave 3, then this would be a different story. But at this stage, still think that we have to be prepared and not surprised if we see another leg to the downside. Because if we will see another or break to a new low on the S&P 500, then I really think that you will try to see media how people and everyone will be turning again to the downside for this year in general. So
there's so much pessimism already. You get another break to new lows and people will officially declare it a bear market, Greg. And
so that's when me and probably as well want to play the other side.
Right.
At least be prepared.
Being patient for it. Just being patient for it.
Having to do with the DAX, that I turned, a long time ago bearish, Greg, and personally, unless we see a daily close above 11,000, I see absolutely no reason why somebody would even consider being long. I think that 11,000, we need to at least penetrate through 11,000 so I can start looking into possible, bullish interpretations from there.
What about the head and shoulder target? Was it achieved? I suspect yes, right?
That's a good question. Give me a second to pull it up, and I'll tell you immediately. So head and shoulders target, we have. Let me do it as we speak. We have this is the high, this is the low, and that's the breakout level, and settings 100% is at, no, we didn't, 9,970.
Okay, that's good. Actually, I'm also observing this 10,000 level. I mean, it's so strong.
So 10,000 in essence. Yeah, 10,000 in essence.
Around there, I mean, it could be really interesting if we get there. Definitely buying here. I think it's too soon, still early in the year, and I just not feeling confident.
If we can go back to the S&P, can you please show me what you're seeing in a short-term scale, in an hourly chart, for example? How do you see the rebound we've had so far?
Don't have an hourly here, but I can take a look.
Doesn't matter. Let's say on the 4 hour. It's fine. It's fine in the 4 hour. Question: isn't there a chance that this is a corrective move to the first leg higher, and we have one more leg higher? Because that's what I'm looking for to participate.
Yes,
yes. That's exactly.
We will probably clear 25.20 because this decline, as you see here,
is corrective. Yes.
In general, if you take a look like this, I mean, it's no real progression to the downside, not either to the upside. So it's consolidation, and it looks like that can be another move.
Yeah, that's why, as I told you, I'm looking to start scaling in from 25.50, to 2600, 2630 maximum. Above 2630, I don't want to participate anymore. That's my plan.
Greg, on the S&Ps, a lot of people are kind of depressed about what happened in December to the market and how we're starting off here. Why don't we give people some hope? Yeah, you read my mind that, that it's not the end of the world yet, and that this is actually setting up a great opportunity. I brought it up, and it's really a minority opinion, and it's based upon your work and other things that we're going to regroup, and there's going to be another rally to participate in, and most likely, if people are nervous, a better time to be raising cash so they're not part of the next stampede. So there you go. That's your monthly look.
Yes,
up towards 3,200.
Yes, we have to understand that stocks, always when they are falling, not always, but in 80% of the time, they are falling fast. But market is rising slow because of fear. That's why. So actually, I remember 2008, 2009 very well, and there were a lot of everyone were bearish. Okay, especially after that such a strong decline. But
were you in high school getting your driver's license then, or what? You're such a young guy.
At the end of high school, yeah. To give you an idea, I was also trying to label the bearish wave counts. I remember this very well. I was looking for just a temporary recovery and expecting wave three to the downside. But now when I look this back, of course, my mindset has changed since then. I have a lot of more experience. I figured out that always when I label any chart, any trend, I have much better odds to be right if I try to label so that I stay with the trend. Always expect another high has a higher probability than to label or mark a final high, right? So looking back then, of course, I want to stay bullish even now, okay? I know that we can be in very late stages of this recovery, but since we are still above this trend line support connected from 2009, since we still, as I showed you on a daily chart, reverse lower only in 3 lakhs, I think that there is still chance for another push to the upside. So, of course, I'm always prepared on something very ugly here, but as long as we are above this trend line support, the lower one, I mean, it's definitely too soon to say that this bull market is over. Even if we break this support line, I would be looking for another, just a temporary ABC drop. I would not be saying that we are now going back to 300, right?
So, by the way, the wheels are falling off gold as we speak. So I think that
also lows as I see.
Yeah. So I think that the reversal warnings I sent for the metals earlier might prove, especially gold, might prove to be well timed.
It's interesting how gold, and because Aussie is again doing quite well.
Yeah, Aussie is almost at the highs of the day, actually. Yeah.
So that's quite nice to see, especially for myself, because I'm definitely interested to be looking for longs next week on commodity currencies.
Okay, very nice. Gregor, what else? What we didn't talk about, which is quite interesting, and we know how important it is for the market. We didn't talk about the bonds, both the treasuries and the bonds. The treasuries are currently making a very decent attempt of reversing. The yields are making a decent attempt of bottoming out after a very strong move to the downside, which the vast majority of the market participants did not expect. Now, the bonds, on the other hand, the bonds did break above that key 164 area. This looks on a daily chart like a big bullish breakout. What do you think? Is this the real deal? Is this a fake move? What do you foresee in the bond market?
Okay, so
now since you opened the bonds, I remind you that I was looking at this as a descending there was a very strong descending trend line, which we broke above, and we broke above the previous high also at 164. That's why I said that it was looking like a big development, like a big bullish breakout after a very clearly
Yes.
corrective move. I mean, a clearly corrective move to the downside. What do you think the case is here?
I mean, the problem that I see here is this recovery. Okay, if I would really love to already turning bullish here on bunds, which would actually suggest that maybe very strong move down is on euro dollar is already around the corner.
Yeah.
But so far we are just testing these old levels here at current highs, and this recovery from these lows is very strange, very choppy. It's definitely not something you want to see at the start of a new breakout, okay, of like a start of a new impulse. So of course there is a chance that wave 4 has finished here, but based on this structure, I'm just a little bit more patient here, and I would not be surprised if we just stay consolidating for even longer time. And this as a wave B. And
what about treasuries?
Treasuries, okay. So on treasuries, I'm tracking this one. As you know, wave C should be made by 5 waves. I know that we have seen here waves 1, 2, and this was consolidating also back in during summer from where we have seen a new low. But this was very, very small to level as wave 4. Wave 4 is typically much bigger, more complex, or at least similar to wave 2. But in very, very rare cases, it's so small. So maybe it's this kind of still flat in a wave 4, and that we'll see a reversal to the downside. So I'm watching this very patiently. But what is really important is that even if this rise is start of a new bullish cycle here, you would still expect a pullback in a lower time frame.
Yeah,
so
a pullback perhaps to retest the previous highs that we had. Okay.
Here around
down towards 121 or something. Yeah.
So would that translate to like a 290 yield on the 10-year, Grega? Something like that. If you have a yield chart, Blake and I were talking about that earlier today.
I have a yield chart here.
Okay, yes. All right.
Probably, but I can take a look at it till next time, and we can cover no problem.
The bearish scenario for yields in what he describes, quotes, is roughly a pullback. In essence, a pullback to retest 280 roughly, and then moving lower. So that's a bearish scenario. The bullish scenario that Greg is looking at the moment obviously would point to a move above the previous double top at 325.
Wow. Okay.
So and this would definitely be very, very important for, as we all know, for stocks as well. So on stocks, as I said, if we are in the wave 4, then it makes sense either to see pullback to the downside on 10-year, or at least stay sideways and not breaking higher in that manner like we see it for the last 2 weeks.
Yep.
Do we have any questions for any other?
Let me see if we didn't cover them. I have actually. I mean, we've covered the questions that we've had. I want to know what you think. Do you think that we have peaked, especially after those spikes in Euro Aussie, Pound Aussie, Euro Kiwi, Euro Kiwi and Pound Kiwi?
Yes. I mean, as I said earlier, if I want to be long dollar, I want to be against the euro. If I want to be short dollar, I want to be against the Aussie. So with that in mind, Euro Aussie definitely could be interesting. I'm waiting a little bit more here to see if we get more weakness. I mean, we are at the 50 and 61.8% retracement of this very strong rise. So if we 61.8% for wave 4 is very, very rare. Okay, so if we're starting to see a break below this level, then I really will say that wave 5 is in place, and I will look for potential shorts opportunities. And in such case, I mean, when Euro Aussie will top out here, I think that we may not get any solid pullback to catch the downside. So the key will be to observe. The key will be to observe the smaller time frame and maybe look for fourth wave pullbacks. That's my plan. Okay, so if we'll see, let me give you an idea. Okay, so let's assume that we are now already aggressively turning to the downside. Okay, then of course we should be now in the middle of a wave 3. So in such case, I would be looking for fourth waves pullbacks to jump into on the short side.
I had started accumulating a short position in the Euro Aussie. Thankfully, which isn't something I often do, thankfully I had put my stop loss at break even after it had moved in the correct direction. And I got stopped out at break even that night that we had the spike. So at least I didn't get hurt by that. But the reason I had already started accumulating a short position is that I agree. I do think that those pairs look like they're topping. They might have already topped. They might be topping shortly. So I agree with you, Greg. I'm looking for opportunities to make pips on the downside on those.
Yes, and what is really important for all those who listen is that I'm not expecting or looking for long idea here. I'm just waiting on Euro Aussie to complete its cycles. Okay, so because someone will maybe think that I'm looking or want to trade on the upside within a fifth wave. But my plan is to wait on a top formation, and then we'll probably look for shorts once I have enough of evidence, especially of what we see is going on Aussie dollar, where we probably put an already in. So
we have a friend here asking, since when flats are legs of diagonals?
Yes. Okay, I just thought whenever I will get these questions. There are also triangles that may not occur in diagonal triangle, okay? But the idea is that, at least I'm looking at this like this, is that this is still a pose within trend. And whenever I see a pose within trend, I will try to label move as a correction. And if that's the best possible wave count that I can get to look for more weakness, then I will even allow this labeling. Make that sense? Because sometimes, even if there are rules, sometimes I have to break rule to find the perfect wave count which fits the current structure or the current trend. Even sometimes when you label or say that we are looking for maybe for a fifth wave on a daily chart, you will see a very nice fifth wave. But on a smaller time frame chart, you will not be able to count perfect 5 subwaves within a wave 5. So my idea is that sometimes we have to break some rules and be a little bit more robust when we are tracking markets and not look for everything to be perfect. But as I said, of course, there is a chance that market will turn to the upside on 10-year US notes, where was this flat found. So actually, if my interpretation will be wrong, I know where to look for that and for what wave count.
We have another friend asking specifically for the pound kiwi. I know we spoke in general about those pairs, but he wants to see specifically pound kiwi.
Okay. So pound kiwi, I mean, it's clearly looking here to be an overlapping within wave B. So I'm expecting more weakness. Okay. And
pound kiwi has been the weakest of all of those recently, because the kiwi was stronger than the Aussie for a bit of time. The pound was weaker than euro. So yeah, the pound kiwi is the most battered one. So it makes sense that if you want to look for more weakness, still pound kiwi might be the best alternative.
Yes.
Hey, Greg. I'm going to be selfish. I saw Euro Pound, and I thought we were going to break out this week, and we attacked it a few times. I still think there's a shot for 94 in Euro Pound, so I'm wondering what your take is on that right now, because that's kind of a way of just playing maybe not a soft Brexit, and you don't have to be right about the direction of the dollar, but just relative strength of euro over cable.
Yes, that's a good idea. So let's have a look at the pound Kiwi for our friend, and let's have a look at the Euro pound afterwards.
I'm a friend too, man.
You're more than a friend. You're family.
Oh, good.
Oh, here we have an overlapping recovery, and what I really like about this chart is that we find a very decisive break to the downside below the lower trend line. So it looks like that we are going to see more weakness here. But firstly, an ABC pullback should play out, and I'm looking for this current recovery as a wave A, expecting wave B, and then more upside for a wave C. So I'm looking for a tracing back towards 50, maybe even 61, where we also have this old wave 2 swing high, and then I will start to looking back to the downside. So the most important is that we have these 5 waves of decline, and that we have also break below this trend line support. So cable in general may stay weak. New Zealand dollar could maybe stay a very nice strong currency for 2019. And New Zealand dollar, as you know, is also looking to see at least
quite good. Yeah, it's looking quite good. Okay, how about Euro Pound that the coach asked?
Okay, so
I also see the potential for more upside, to be honest, because there is a triangle here. Exactly.
Yes, it's a triangle. I'm expecting a breakout. I was looking for minimum upside in the last few weeks. I was looking for prices to reverse back to the upper side of the range, and it looks like that we could now just fell into another type of a consolidation here, because we didn't manage to break decisive this upper trend line.
True.
So it looks like that this can be just consolidating now sideways, and then we see more gains. Okay,
so you're also looking for a move higher, right?
Yes, of course. But firstly, we may see more pullback here. Okay. Because we can count here 5 waves to the upside. So I think that there can be a pullback coming, and then more upside. But of course, full pullback should be in 3 waves. And since first leg was quite extended, you would be expecting a pullback into the area of a wave 2, not only into the area of a wave 4. And this is much lower. Okay, so
cool.
Looking for to finding a support here could be possible, but only for temporarize, maybe for wave B. So idea is to wait on this wave C.
One last, we're going to cover two more things. We gave a general view of the euro and pound crosses made. So in general, all of them in correction. So you should expect more weakness. I'm referring to our friend that's asking for the euro kiwi. What is your view on crude, Grega? As you know, I have a long pattern in play. I was long since 44. I think there is a decent chance that we're going to see perhaps a bigger rebound. What do you think?
I mean, I'm expecting a rebound as well. And so far, we have seen a very nice move here, very nice recovery. But looking at this intraday chart, it's some kind of an overlapping price action, right? So I'm curious to see what will happen once we reach 49 area around there. I would be expecting pullback. I know that this, to give you another perspective, just a second, this recovery, okay, so that you will feel more confident for your.
No, I've already booked 2/3 of it because I'm long from 44. So no matter what happens here, I've already made a very good, profit. So
actually, this could also be seen as a leading diagonal. Okay, it's not a perfect one.
Yeah, in which case we have a lot more upside. Yeah.
Yes, it can be. But what my concern is that here was some kind of a triangle. okay, in the middle. But triangles never occur in wave 2. So that would really be my final interpretation. And at this stage, I still have to observe what will happen here. And if we're starting to see aggressive move to the downside, especially if euro dollar will come under pressure, then this could definitely be the case here. Of course, we also have to watch what will happen with dollar CAD. I know that Canadian dollar has seen a very nice move, but
reversal. Yeah.
Yes, but crude oil is not so aggressively to the upside.
Yeah, not yet, at least.
Yes. Not at this time when CAD was strong. You would expect a very strong momentum that would lift oil prices as well, but it was not the case. So maybe this crude oil will again come under pressure once we see a rally on dollar CAD into wave B that I'm expecting.
Tell me something else. Do you have a count on copper? I'm short copper. I've already booked half of my short. I still hold another half, but I'm not asking because of this. I'm asking because a friend, Scott, is asking about copper.
I don't have it, but maybe I can take a look real quick. Just let me find it, please.
Okay.
Do we have a guest today? No.
If we had a guest, we would have stopped talking 20 minutes ago.
No, and actually the system somehow booted the Dale out. So whenever you guys are done, yeah, just just say good night and everything. So Dale is not here.
Oh, okay, sure, absolutely.
Oh, okay. We can also take, if we have time, we can also take a look at Bitcoin later.
Sure.
I mean, the Bitcoin was really interesting. Just let me. I'm looking for.
I think there is at least one more leg higher in Bitcoin.
Okay, we have here. Longer term. Okay.
Not necessarily. We can go to a daily chart if you want, and yeah.
I'm just wondering if here was
I shorted the breakout from the triangle, Gregor. You see that's clearly a triangle.
Yes, it looks like.
Yeah, I shorted the breakdown from the triangle. That's how I got triggered.
Okay, my concern is this spike to an alloy. Now we are already reversing. I mean,
yeah, I agree with you.
A triangle here.
Yeah.
We have to make 5 waves down. Okay. So maybe we are now in a middle of this bearish impulse, and I will. Okay, so this is maybe wave 1, wave 2. Maybe we are now in a wave 4, and we'll see more weakness. So trend is still bearish as long as we are below 2.660 area. But I'm just wondering if Aussie dollar will see a recovery. I assume that this was a spike lower at the same time when Aussie dollar saw a decline. Is that right?
No. That's the curious thing. It responded later on. Initially, didn't do much because I had the position already. I mean, I have several days this position. The moment I realized that night that Aussie was crashing, I was immediately, oh my God, I must be making a killing in copper, So I immediately switched on my trading view chart, to see where copper is, and it had barely moved, and I was like, what the hell? I mean, why isn't it plunging with it? And it just followed lower slowly afterwards. So it didn't spike.
Interesting. So,
yeah, very interesting.
I'm curious to see if this copper could really turn back to the downside, even if Aussie is rallying. So I would be very careful here. I mean, if Aussie is going to be stronger and copper going to see, as I said, 2.650 or 60 area, then I think that copper will be ready to make a higher recovery.
Okay, let's see. I've already booked half of it, so I'm just hoping for more profits.
We also break down out of a triangle, right? And we spiked only to a new low. So
yeah. So theoretically speaking, there is a decent chance for more. Yeah. We have a friend asking if you have the time, Aussie Kiwi and Aussie CAD. Oh, and you said on your own Bitcoin, I actually called more or less the low here on the webinar because we had like a descending wedge. So I liked it to the upside in the short term, and the price action that we've had since the first spike higher in Bitcoin looks clearly corrected to me. So I think that Bitcoin has at least one more leg higher towards 4,400. What do you think about it? Because you mentioned it.
Okay. So Bitcoin, it reached this interesting support here around 3,000, which was also a spike from September 11, 2017. So actually, this was a starting point of this mania that got in a lot of players. So now when we fully retraced, I really think that at least temporary recovery can be seen, and it's already forming. Here on a daily chart, we have seen a divergence. So this was a very nice catch earlier by Dale, who said that on the S&P 500, we haven't seen a divergence yet, which means that low can still be pending. So on Bitcoin, we had a divergence. So actually here low can be put in place. And also here's potential head and shoulders pattern. Left shoulder, head, right shoulder. And we're now, what I like about Bitcoin at the moment is that now we are trading slow. So we recovered very fast.
Clearly corrective. Yeah, clearly corrective, so this move, yeah.
Probably we are going to see another leg to the upside. Either this will be wave C or maybe will be wave 3, but I think that we may see 5,000 again on Bitcoin while we are trading above this December 2018 level.
As I told you before, my minimum target is a retest of that high of wave 4 at 4,400. That's my minimum target as an upside from here.
Yes. Well, how much is that?
What do you mean, mate?
Which price is that?
4,400 is my minimum target on the next leg higher.
That's this wave 4, yes.
Yes.
Okay, makes sense.
Not only that, I'll explain why. Because what you have there as wave 4, from a basic technical analysis perspective, was a perfect descending wedge. And the minimum target for a descending wedge is a retracement to the beginning of the formation. That's why I said since the beginning that, I like 4,400 at least for a retest.
Yes, and actually that would be, or this could be, for me, a starting point for a wave 3 acceleration.
Yeah, might be. Yeah, if we break above that, that might trigger some, some more interest. And
just a temporary corrective rise, then we could expect that market will slow down at the area of wave 4. So this is definitely a key level that you mentioned for sure.
Okay, nice. So what about and let's wrap it afterwards because it's we've already been for 1.5 hours here. Aussie Kiwi, Aussie CAD, and let's wrap it.
Okay, so as you know, we were bearish on
the break of the huge triangle. Yeah.
I'm not sure if this broker has the right quotes here. There were different different brokers, but it looks like that we are now in a new phase of recovery. So I would be expecting 3 waves to the upside minimum. There's still a chance,
and then lower, yeah,
and then lower. But I would be very careful with this because of these spikes. I know that you're trying to ignore them, as Dale said, but of course, those spikes can sometimes also mean a significant reversal, not just temporary. But the key is here that probably we'll see more upside, at least for a free wave rally. So I'm looking for 106, 106.70 around there, maybe this small consolidation, which was also wave X swing lows here, as we can see from June 2018.
Okay.
So
and what you got?
My next projection level, and then we see what happens there. If we're starting to roll over, then we turn back to the bear side. Which one?
OZCAD?
I don't have OZCAD as I know, but I will take a look at it.
I'm sure that you can do your magic.
Okay, this is quite interesting. I mean, this spike didn't reach a new low, but this previous was quite a strong recovery. Okay, so
yeah, this looks like a 5-wave up actually.
Yeah, so very nice 5 waves up. This could be also 5 subwaves to the upside, and this could be like a triangle here.
Okay, so an A, B, C, and the spike being the C. Yeah.
Exactly. So from a trading perspective, I would probably be waiting in this overlap and then a pullback. So if we can reach this price with only one lack of recovery, then I would be watching for pullback and then maybe even look for some longs. Okay. It looks like that we are headed to the upside, or at least stay sideways.
At least
I'm not expecting this swing low to be retested anytime soon.
Okay, that's quite clear.
So these are interesting Aussie crosses, which definitely suggest that even Euro Aussie might have finally put a top in.
Yeah, Euro's spike does look like an exhaustion spike.
So new high to complete a high, yes.
Yeah, it does look very exhaustive, to be honest. So I don't know. Euro Aussie looks to me like a good candidate for a pair that has topped. Yeah. At least that's how it looks.
After low form pairs report, I see that Euro is moving aggressively to the downside at the moment. Gold keeps declining, but Aussie dollar keeps holding. So gold and Euro are on the same road at the moment, but Aussie not. So definitely those crosses are interesting.
Okay. Gregor, thank you very, very much for spending more than an hour with us today.
No problem. Thank you to having me.
And I wish everybody, a great weekend. And as always, we're going to be back here on Monday. If you haven't done so, you can, test ForexAnalytix for just $1 for 10 days. And I strongly suggest that you go to our homepage and visit our reimbursement page. ForexSpark FX can help you find better alternatives for a broker, or even help you get cashbacks or subsidize your ForexAnalytix subscription, even by staying on the same broker that you currently are. You should really speak to those guys. They're the best in what they do. So I wish you all, a lovely weekend, and adios. See you on Monday.
Bye-bye.
Bye, mate.
how you doing? Hope everyone's had a decent partial week. Starting off with the dollar retesting 96.
Monday.
Bye bye.
Bye, mate.